Hi, everybody. Scott Riley with Market Update Desk and Mortgage One, February 22nd. We got some really good news on existing home sales that came out today from National Association of Realtors. So I wanted to cover that with you. Existing home sales for January. Now, this means closings on existing homes. It was up 3.1% month over month, which gives us an annualized pace of 4 million sales a year. That's down slightly year over year by negative 1.7%. Now, we actually would have been at 5.8% in January instead of 3.1, except we actually had a December revision upwards. So shockingly, numbers get revised after the fact. We actually showed that we're pulling forward with some sales, which is good news. Median home price actually increased to $379,000. That's up 5.1% year over year. Inventory, this is the big deal. We're at 1.01 million units. That's an increase of 2% month over month and 3.1% year over year. So those are some very positive signs and positive trends. Currently nationally, we're at a 3-month pace for inventory. Now, a normalized market is considered about 4.5, 4.75 months. Locally, obviously, we're much lower than that, closer. I think the latest GRAR numbers showed 1.1 months for Kent County. Now, some interesting things. There was an average of 36 days on market per property. Now, that's actually up a tick from where we were the previous month at 29 days on market. First-time home buyers consisted of 28% of the market, down slightly from 29% the preceding month. Cash buyers, this actually ticked up again to 32% from 29%. It's actually at the highest number in the last 10 years as a percentage of the overall buyers. Investors grew just slightly, up 17% from 16%. Yesterday, we got the reading of the Fed minutes. It was pretty much what we thought. Not a ton of shockwaves in there. There were a few key points. The Fed is certain that they want to cut rates, but we're non-committal on the timing of the first rate cut. The big takeaway was that the March expected in the March meeting. We know that they're not going to cut rates now. However, they'll be discussing their balance sheet, which is also a very weighted issue. The majority of Fed members want to consider slowing or tapering the reduction later this year. This would be very helpful in absorbing the supply of bond market sales that are out there. One quote that stood out was some participants remarked that given the uncertainty surrounding estimates of ample supply of reserves, slowing the pace of runoff could help smooth the transition to that level of reserves or could allow the committee to continue balance sheet runoff for longer. So those were some positive takeaways. One Fed member, Vice Chair Jefferson, echoed much of the same minutes this morning, said it would likely be appropriate to reduce monetary policy later in the year. Again, not committing to an exact time frame, and it does give the market a lot of gray to try to figure out what's going on. He also claimed that there is a path to restoring price stability without significant increase to unemployment that is often associated with significant tightening cycles. Yesterday, we also had a 20-year bond auction that was not well received at all. It goes back to the amount of supply in the market, institutional buyers, international buyers. This caused a downturn in the bond market yesterday that hurt us. Hopefully, we get a little bit of that back the remaining of the week. Jobless claims, kind of about what we expected. Initial claims were down 12,000 to 201,000. Continuing claims fell 27,000 to 1.862 million. Now, one thing to pay attention to, it's important to remember that the data is for last week, which is the sample week. That'll be factored into the next BLS jobs report. So we do have concern once we get that new jobs report in a few weeks, because that being the sample week. The technicals we're butting up against a couple of resistance points. We've gotten hit the last few days with the inflation numbers, bond auction sales. So we are very cautiously going forward with expectations of where we're going to be in rates for the next couple of weeks. Give us a call. We'll help you get pre-approved, access our knowledge, our experience. We're happy to help you out. 616-293-2189. It's a sunny day outside. Let's go enjoy it. You have a great day.